Money, money, money. Why should we care about central banks? Let's be honest, talking about central banks is about as exciting as watching paint dry. But here's the thing, these institutions have a huge impact on our lives. They control the money supply, interest rates, and basically the entire global financial system. Think of central banks like the referees of the global economy. They set the rules, try to keep things fair, and occasionally make questionable calls that leave everyone scratching their heads. But unlike referees, their decisions affect everything from the price of bread to whether or not you can afford a mortgage. So yeah, maybe paying attention isn't such a bad idea. A brief and scandalous history of central banking, from royal screw-ups to global players. Central banking has been around for centuries. It started with kings and queens who needed money. They'd borrow from wealthy merchants and give them the power to issue currency. The Bank of England was established in 1694. There was rampant speculation and a stock market crash. Fast forward to the 20th century and we have the Federal Reserve in 1913. The Bretton Woods Agreement in 1944 established a new global financial order. The wizardry of central banking, how do they control the economy anyway? Central banks might seem like secretive organizations run by people in suits who speak in confusing jargon. And you wouldn't be entirely wrong, but at their core, they operate on a few key principles. Their main goal is to keep the economy stable. They do this by controlling the amount of money in circulation and setting interest rates. Think of it like adjusting the temperature in a room. If the economy is overheating, meaning inflation is high, they try to cool things down by raising interest rates, making it more expensive to borrow money. If the economy is sluggish, they lower interest rates to encourage borrowing and spending. Central banks also act as lenders of last resort. This means they provide emergency loans to banks and financial institutions that are at risk of collapsing. Remember the 2008 financial crisis? Yeah, central banks played a big role in preventing a complete meltdown. The money game. How central banks play together and sometimes fight. Central banks don't operate in a vacuum. They're constantly interacting with each other, coordinating policies and sometimes even throwing a little shade. It's like a high-stakes poker game, but instead of chips, they're playing with trillions of dollars. The big players in this game are the central banks of developed countries, like the Federal Reserve in the US, the European Central Bank, the Bank of England, and the Bank of Japan. These institutions wield significant influence over the global financial system. They often work together to address global economic challenges, like the 2008 financial crisis or the COVID-19 pandemic. But they also have their own interests and priorities, which can sometimes lead to disagreements and tensions. For example, one country might want to keep its currency weak to boost exports, while another country might prefer a strong currency to keep import prices low. These conflicting goals can create friction and uncertainty in the global economy. Section 5, Central Banks as Heroes, the case for economic stability and growth. Central banks often get a bad rap. They're accused of being secretive, unaccountable, and out of touch with the needs of ordinary people. But let's give credit where credit is due. They have played a crucial role in maintaining economic stability and promoting growth, especially in the aftermath of major crises. Remember the Great Depression? Yeah, central banks learned some hard lessons from that disaster, and have since become much more proactive in preventing similar meltdowns. By controlling inflation, central banks help to ensure that the value of our money doesn't erode over time. This is especially important for people on fixed incomes like retirees, who rely on their savings to maintain their standard of living. Central banks also play a vital role in promoting employment. By keeping interest rates low, they encourage businesses to invest and create jobs, so the next time you get a paycheck, you can partially thank your local central bank. Section 6, Central Banks, the Villains, Inequality, Austerity, and Why Everyone's Mad. Okay, we've heard the case for central banks as saviors of the economy, but let's not forget that they also have their fair share of critics. And some of these criticisms are pretty darn valid. One of the biggest concerns is that central bank policies have contributed to rising inequality. By keeping interest rates low for so long, they've inflated asset bubbles in the stock market and real estate, primarily benefiting the wealthy. Meanwhile, ordinary people struggle with stagnant wages, rising costs of living, and a growing sense that the system is rigged against them. It's no wonder that trust in institutions, including central banks, is at an all-time low. Another criticism is that central banks have pushed for austerity measures in response to economic crises. These measures, which often involve cutting public spending and raising taxes, have disproportionately impacted the poor and middle class, while doing little to address the root causes of the crises. Section 7. Developing countries. The little guys in a big, bad financial system. Developing countries often face unique challenges within the global central banking system. They're often at the mercy of decisions made by powerful central banks in developed countries, which can sometimes have unintended and negative consequences for their economies. For example, when the Federal Reserve raises interest rates, it can trigger capital flight from developing countries as investors seek higher returns in the United States. This can destabilize their currencies, increase their debt burdens, and make it harder for them to finance essential services like healthcare and education. Moreover, developing countries often lack the institutional capacity and policy space to effectively manage their own monetary policies. They may face pressure from international organizations like the IMF to adopt policies that prioritize financial stability over social welfare. Section 8. Time for a rethink? Is the global central banking system broken? Given the challenges and criticisms we've discussed, it's fair to ask whether the current global central banking system is fit for purpose. Is it time for a fundamental rethink? Some argue that the system is inherently flawed and that we need a radical overhaul. They point to the recurring financial crises, the widening gap between the rich and poor, and the failure to address climate change as evidence that the current model is unsustainable. Others believe that the system can be reformed from within. They advocate for greater transparency and accountability from central banks, a more equitable distribution of the benefits of globalization, and a shift towards policies that prioritize long-term sustainability over short-term profits. The truth is, there's no easy answer. Reforming the global central banking system is a complex and challenging undertaking, but it's a conversation that we need to have if we want to create a more just and sustainable global economy. Section 9. Fixing the system. What are our options really? So, if we agree that the global central banking system needs some fixing, what are our options? Well, it's not like there's a simple instruction manual for this kind of thing, but there are a few ideas being tossed around. One proposal is to give central banks a broader mandate that goes beyond just controlling inflation. This could include things like promoting full employment, reducing inequality, and even addressing climate change. Another idea is to increase democratic control over central banks. Right now, they tend to operate with a lot of independence, which some argue makes them unaccountable to the public. Giving elected officials more say in their decisions could make them more responsive to the needs of the people. Of course, there are also more radical proposals like abolishing central banks altogether and replacing them with something entirely new. But those ideas are a bit more out there and would require a fundamental rethinking of how our financial system works. Section 10. The future of money, crypto, digital currencies, and what comes next. Speaking of rethinking our financial system, let's talk about the elephant in the room, cryptocurrency. Bitcoin, Ethereum, Dogecoin, these digital currencies have been shaking things up and making central bankers break out in a cold sweat. Cryptocurrencies operate independently of central banks and governments. They rely on blockchain technology, which is a decentralized and secure way to track transactions. This has led some to believe that crypto could eventually replace traditional currencies and render central banks obsolete. Now, whether that will actually happen is anyone's guess. Cryptocurrencies are still volatile, prone to scams, and not widely accepted as a form of payment. But they represent a potential future where the power over money shifts away from central banks and towards the people. Section 11. In conclusion, central banks, global finance, and why we should all pay attention. So, there you have it. A crash course in the wild world of central banking. We've covered a lot of ground, from their history and functions to the criticisms they face and the potential reforms on the horizon. The main takeaway? Central banks are powerful institutions that play a vital role in our lives whether we realize it or not. They're not perfect, they've made mistakes, and they're often shrouded in secrecy. But they're also essential for maintaining economic stability, promoting growth, and preventing financial meltdowns. As we navigate the complexities of the 21st century, understanding how central banks work and the challenges they face is more important than ever. So the next time you hear someone talking about interest rates, inflation, or quantitative easing, don't tune them out. Pay attention, ask questions, and engage in the debate. After all, the future of our global economy might just depend on it.